So we all know that the crypto market has been crashing day after day after day for about 2 weeks now, and that crypto levels are really damn low, the lowest that we've seen them in over 2 years at this point. Bitcoin is sitting at about $20,000. Ethereum is sitting at about $1,000. For the vast majority of people who have been invested in crypto over the last year, they probably convinced themselves that at this kind of point in a market cycle, they'd be buying like there's nothing else to do. But the reality is that people are very afraid right now, and that's actually for very good reason. The Luna Terra collapse was absolutely monstrous, probably the biggest one we've had in crypto so far, and one of the worst examples of a protocol just going to zero almost overnight. Celsius as well is a major problem that millions of people are worried about. People have lost money. They will continue to lose money. What we've seen is a run on a bank, but the problem is that this isn't a real bank, it's an unregulated crypto bank, so people have no real protections from this institution. Now, a lot of people have been likening these events to what we saw back in 2008 during the great financial crisis. Lehman Brothers went under famously, as did Bear Stearns, and a bunch of other banks from a bunch of other countries did the exact same thing. And that was really because actually it was these banks' actions and their poor balance sheets which triggered this massive recession. This time around though, there is a lot going around, a lot of people making claims that actually this might be referred to in the future as the Great Crypto Collapse because it seems an awful lot similar to 2008, it's just the people we're talking about have changed. Maybe Luna Terra is Lehman Brothers, maybe Celsius is Bear Stearns. Comparing the size of these companies, the amount of people that they employ and how influential they are in financial markets, actually there is an argument to be made that this kind of makes sense. So if that's the case, if this is the great 2022 crypto collapse that will cause a worldwide recession like we saw back in 2008 with traditional finance, what's the brand new news that is triggering this video here? Well, it's that a bunch of major crypto companies, in particular exchanges, are laying off employees because they're not sure about the economic environment in the future. They're not sure about their balance sheet, about their ability to continue to operate into the future. And so they're taking action and they're laying off thousands and thousands of people. Now, one of the biggest companies in the crypto space, and probably the biggest one in the US, because it's always been seen as sort of a blue chip company in America, one that's run in America by Americans, so the chances of scams and collapse is always seem to be a little bit less likely. Well, Coinbase has come out and announced that they're going to be laying off nearly a fifth of their workforce, over 1,000 people, and that's a little bit worrying for anyone watching this. This comes at the exact same time as the crypto market is slowing down all over, not only in terms of the prices of these specific coins and their tokens and their market caps, but also in just crypto market activity. There's far less trading going on, volume has dropped drastically, and that means there's less money to be made on fees by these exchanges. The crypto market for the first time in over 2 years was suddenly worth less than $1 trillion as well. Now, Coinbase had built up to be an absolute institution in and of itself. Brian Armstrong, the man who runs it, is probably the second most famous bald Silicon Valley entrepreneur around, second only to Jeff Bezos, of course. He's a massive name and the company is huge. And as you can see here, it had around 6,000 employees at its absolute peak, which represents about a doubling over the course of 1 year. And it's already announcing before a recession even really starts and before they're showing any real problems regarding liquidity or maybe their balance sheet, they're already cutting that down by a fifth. The reality is here that as they're already getting worried, things are probably going to get worse into the future as well. We haven't even really hit a recession yet. People are saying we're in crypto winter, but guess what? You're still reading about crypto on the news, and a real crypto winter is when everyone in the world just becomes indifferent to that market. It follows then that actually things are going to get worse. Coinbase are going to be making fewer fees in the future. They're going to have fewer people signing up every month, and their revenues are going to drop drastically. Now, Gemini is another company in that same sort of crypto space. They really made a growth. They really expanded in the crypto lending space in particular, just like BlockFi. And as you can see from these highlighted passages here, well, things haven't been brilliant for them recently either. They have admitted that they overhired during the last year's crypto bull market, and they're having to make corrections to that mistake. 10% is completely understated, they said, because their claim is that they're letting off 10% of their staff. Apparently, they've been doing mass layoffs since March already, 4 months now, and so things really aren't too great. Now, to be perfectly honest, I actually see this as a good sign for that company in particular. The idea that they didn't leave it until the last minute to start making these necessary cuts is actually rather reassuring for the company and for the people who use their services. Frankly, it's been blindingly obvious to me and everyone on this channel that the crypto sphere is going to enter a bear market and probably a winter as well. We'll finally see it enter that stage. But with the money and the information available at these companies' fingertips, they had to know the same thing was coming, or they at least had to know that it was potentially on the books. And so if they just ignored this kind of thing, if they ignored these developments, which some of these companies like Coinbase have done up until this point, then that's not too reassuring for the management of the company. The fact that Gemini have been laying off their overemployed staff for months now is reassuring because it means they have a conservative, smart organization that is well run and willing to make difficult decisions when the times call for it and let people go, which is just what a company needs to survive a recession. Now, we're also seeing the exact same thing with Cryptocom and BlockFi, which are actually two companies and two crypto platforms that I have used personally. I've used Crypto.com and their debit card for I think about 18 months now at this point, and I do really like it. I used their Earn platform for a while as well, and I used BlockFi's Earn platform as well. What's the news from then? Well, it's identical to that coming out of Coinbase and Gemini. They are firing their staff because they overhired during the bull market, and they're recognizing that actually times are changing. They don't need this many staff and they can't afford them when their revenues start dropping. Now, Crypto.com is only firing about 5% of its workforce, which isn't actually a huge amount, and it's not one of the biggest companies in terms of the number of people it employs anyway. BlockFi is doing a little bit more. They're going a little bit harsher, and they're firing about 20% of their employees. But again, it's a smaller company, so it's not a huge amount in and of itself. Now, once again, I'm quite reassured by the action that Crypto.com has taken because over the last few months, they've already started acting because of the bear market that they've seen us enter. They've been cutting their earn yields. They've been cutting the cashback that you get on debit cards, which isn't nice from a customer point of view. As someone who used those earn yields and those credit card rebates a lot, it's a bit upsetting to no longer have access to them, but it does give me confidence that the company was prepared for this bear market, that they knew it was coming, and that actually they'll be able to weather it better than a company which has just ignored these signs into the future. Now, BlockFi is sort of taking the other approach. They weren't exactly early, they weren't the first to act regarding the crypto bear market, but they are acting very strongly, cutting 20% of their workforce. That's quite a significant amount. I mean, 1 in 5 people will be losing their jobs. So they're basically saying, yes, we're going to make those hard decisions, get rid of anyone who isn't absolutely essential, and so the company will survive and your assets will be safe. Now, next on the list for bad bits of news from the crypto market, we have 3AC or 3 Arrow Capital, which is a massive institution in the crypto area. It's a venture capital firm, really. Well, it's showing some problems. No one really knows what's going on, but whatever it is, it doesn't seem good at all. And that's worrying because, of course, we've had the Celsius kerfuffle where it might be about to collapse. We don't really know. It might have survived. We had Lunatero, which did collapse. And so everyone's a little bit on edge. Now, the basic idea here is that a lot of people are suspecting 3AC are about to go insolvent, that they're about to go bankrupt, and their leader, their CEO, Suzu, came out and basically said that he's in the process of communicating with relevant parties and they're fully committed to working this out. Now, that's quite cryptic. It doesn't really tell us a whole lot, but it does show us that there is a problem here and that the company is working to solve that problem, but that's not necessarily a good thing. Now, what exactly is the problem that's causing this maybe liquidation, maybe bankruptcy? Well, it seems like 3IC have been margin called as the value of their assets are falling. And of course, an institution like that is going to be using leverage and all sorts of fancy financing. They started moving around millions and millions of dollars of various cryptocurrencies of ETH, paying back some of their loans to try and avoid these liquidations, and that has contributed to a fall in the value of Ethereum and ETH in particular because they were massive holders of it. Now, this Twitter thread that you can see here is rather interesting, but it isn't exactly concrete, so I'm not going to go through it here. I will link it down in the description down below so you can check it out if you want. Basically, it just alleges that there's an awful lot of money being moved around by 3AC, that it is essentially the company paying back their debts, trying to stop a mass liquidation from happening, and that it's representative of the trouble that the company is in. There are also a couple of allegations that 3AC, as a venture capital firm in crypto, has been trading crypto and that it posted two massive losses amounting to almost $70 million back in May. And that's not good news either. They might be running out of liquidity, and that could be one of the causes of the problems that we're seeing here. Now, as usual, crypto is a very cloudy sort of industry. No one really knows what's going on. Suzu, the guy who runs the company, has gone and sort of destroyed his online presence a little bit, which is making a few people thinking that he's ready to get running for the hills if his company collapses. He's removed all mention of his investments on his Twitter bio, as you can see here. ETH, AVAX, Luna, Sol, NEAR, every cryptocurrency that he used to have listed in his Twitter bio, he's taken out in particular, and he's only keeping Bitcoin. Maybe he's turning into a Bitcoin maxi, it's not too clear. And then he's also gone about and just outright deleted his Instagram profile as well. Finally, it's also believed that 3AC had massive losses from the Luna collapse just over a month ago. They reportedly had a $500 million swap for Bitcoin and Luna just a couple of weeks before it totally collapsed. It's assumed that most of that is lost. We don't really know. Maybe they sold out before it totally collapsed, but it isn't clear. If they did lose that money, then that would also go some way in explaining why they're having this liquidity price crisis and why they might be on the brink of bankruptcy. Next then on the list for problems in the crypto market for this week, well, Celsius, which has obviously been in the news an awful lot, has gone out and hired a bunch of restructuring lawyers after they've had to, freeze all of their withdrawals and basically hang their customers out to dry. Now, I'm not saying that hiring lawyers immediately makes you guilty. Of course it doesn't, but it does show that the company is aware problems are about to start. Maybe they're guilty. Let's be honest, they're probably a little bit guilty. And so they're preparing for potential legal action because they are basically holding people's assets. Some would call it stealing. I wouldn't hold it against anyone who does say stealing. And so they're preparing for a massive legal battle. This doesn't inspire confidence in the company at all. This isn't what you want to see from a company which is holding your assets and holding off from them. You'd rather see them put that money towards paying out the assets that they owe you, as opposed to just hiring millions of dollars worth of lawyers. Now, the company is, of course, still claiming that they're looking to help get everyone their money back, to get them all their assets, but things just aren't looking too positive. They're maintaining a solid front, saying that they've stopped these customer withdrawals so that in the long term, they can ensure that everyone gets their money, but it just doesn't seem too likely that that's going to be the actual outcome. They've been reportedly trading with these assets that they had borrowed off people. That's how they were paying that yield in the first place. And apparently they've made massive losses with those trades. They probably had some kind of exposure to Luna and UST. It hasn't been totally clear. In an interview I did with Alex Mashinsky last week, well, he said that they had no exposure to UST, but in other examples, they've said they have minimal exposure. So I don't know which one's true. They've also been burned by staked Ethereum, which has lost its peg to Ethereum. They've probably lost about 5 to 10% on that position. And then they also put up hundreds of millions of dollars worth of Ethereum, staking it into the protocol itself, which means that they can't get that asset, those assets out for about a year. And as people want their money back, well, that's a major problem too. Finally then, the last problem for today is talking about stablecoins. Now, most of the focus has been on USDD and USDN, which have lost their pegs over the last week or so. We also had UST lose its peg entirely and completely collapse a month ago with that Luna collapse. And now there's a little bit of trouble around with Tether. Now, it isn't a major problem. I'm not trying to stoke fear, but it is a problem nonetheless. As you can see here, Tether used to hold its peg almost perfectly at $1. And then we had this trouble around the Luna collapse where it did drop off a cliff for a day, losing 3% of its value. And then it mostly recovered, but it hasn't entirely recovered. And it's sitting just slightly below its peg today. What is actually going on here? Well, because Tether is backed by assets. I say assets because we don't really know what it's backed by, but that's what they claim. When you go to the company Tether with your USDT tokens, well, they give you US dollars in return. Well, what this means is that the market is pricing in the fact that actually they don't believe Tether has the dollars to pay everyone out. And so if there's a run on Tether, well, they'll come out in trouble. They won't be able to pay everyone off. And we'll have an exact same situation as we've seen with Celsius and any other run on a bank you can think of in history, where they just have to close their doors and say, sorry, no money for you today. Now for Tether, this would be absolutely monstrous. It's worth tens and tens of billions. It provides massive, huge amounts of liquidity to crypto markets. It would crash the crypto markets further. I think if Tether collapsed tomorrow, we'd probably see Bitcoin fall down to maybe like $5,000 or $6,000. It would be absolutely monstrous. Now, this does bring me on to the idea of too big to fail, too big to not get a bailout, that idea that's been around for decades now, and we saw a huge amount in 2008. Obviously, with us and many other people making the comparison between the 2022 crypto crash and the 2008 financial crisis. Well, do we think that any of these companies are too big to fail? Do we think that any of these companies are going to see bailouts from the US government, for instance? Frankly, I think they probably won't. In fact, I'd go further and I'd bet my money that they won't get bailed out, that the US government and most other governments would be happy to let these companies collapse for a couple of different reasons. The first is that they aren't actually integral to just going about your life. If a company like Visa or MasterCard went out of business and stopped operating, well, every credit card and debit card in the world practically would cease to exist as well. That would be a massive impact on the world economy, and so governments would bail out those companies. The same can be said for a bunch of massive financial institutions like banks, like we saw back in 2008. Of course, they let some of them die, like Lehman Brothers and Bear Stearns, but not all of them. With crypto, though, there isn't really any company that actually is integral. People would lose their money, they would lose their investments, but the economy would continue to function. There wouldn't be any real use cases for crypto that are no longer being filled at all, because frankly, everything is already sufficiently fulfilled by traditional finance in that sense. The second reason I think that governments would actually be quite happy to see these companies fail is because they don't seem to like cryptocurrency. They like their own fiat currencies. They want to maintain control over their populaces. And the idea of new capitalist digital currencies coming out and changing everything and taking away influence and control from them, well, that's not exactly a nice idea for these governments. Finally then, to finish off for the day, a couple of days ago in a video talking about Celsius in particular, I said that I'm going to try and do another interview with Alex Masinski to try and find out what's actually going on, try and get some official concrete words out from him. And so I asked everyone, what questions would you like me to ask him if I can get him on board for another call? I picked some of the best ones out here that I thought were funny or poignant. Some of them are a little bit jokey. Some of them are actually very serious. I'm just going to show you these. This is what people have come up with so far. And I'm going to ask you to please leave, I'll put a comment. And so please reply to that comment again if you have any questions that you'd like asked as well. So the first one is, if he doesn't consider Celsius to be a bank, which he doesn't because he makes a specific distinction between decentralized finance and traditional finance, does it deserve to be bailed out if it continues to get run on? Basically, if it goes bankrupt. Does he know even one person who has a problem withdrawing money from Celsius now? Well, this is a little bit tongue-in-cheek from that tweet he made a couple of days ago, about 12 hours before Celsius announced that it was not letting anyone withdraw. It was a very arrogant thing for him to say. He didn't come off well at all, and so people are understandably angry about that. David here would like Alex to be asked why he lied about his exposure. This is probably in reference to the fact that he's given different answers on different occasions to whether or not Celsius was exposed to UST. I assume it also extends to other things that have been struggling recently, maybe USDN, maybe USDD, maybe ST, ETH, and other things like that. Finally, one which is actually very relevant. How will they stop a bank run when they reopen withdrawals? What's the strategy? How is Celsius going to fix this long term? I know for a damn fact that if they did open up withdrawals again, everyone with their assets would instantly take everything out. So they have to have the resources to pay them out instantly. They don't have those resources or they wouldn't have shut down. So what are they actually going to do in the long term? If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.